Hello traders, and welcome to this week's analysis video where I'll be looking at some possible trading opportunities in the markets that are higher probability for these coming few days, and it's for this week of 30th of May 2022. My name is Dima. I've been a trader for about 5 years now, and we're going to have a look at a few setups in this short video, and I'll take you through some of the technical analysis that I'm looking at and why I've chosen some of these charts for you. So let's have a look through them together and see what we can find in the market. So what I've done is I've picked out a few for you for this week. So let's go through them. Before I start, just to mention that the overall outlook that I have for this week is a weakness in the dollar, which would correlate to a strength in the currencies associated with the dollar. So the reason for that is because you can see, if I look on the weekly chart, we're currently on the Sunday, so I've got this little lock here, but we've got all these bearish weeks, and now we've got this kind of swing formed, and we've got two bullish weeks, and that's on the pound dollar. If I look at the Aussie dollar, it's basically this almost the same. A big downtrend and then these two bullish weeks. You can look at the dollar Swiss, again bullish on the dollar, and now the dollar has gone weak. So I'm looking for the continuation in the weakness of the dollar. So that means strength in the pound. So here is the weekly time frame. These are the weekly candles. So if I now look at, let's look at the level right here that I'm going to draw for you. Got a level here where that can serve as a level of support resistance that the market may retrace back into. And if I look down a few time frame here, if I go to the daily, I can see this last swing point right here where the market dropped from, and it's ended up right here reversing. So I'm just going to have a look at the Fibonacci. If I draw that, where's my Fibonacci tool? Fibonacci, there you go. Okay, if I look at that and I place that here from the low to the high. Oops, that was the trend line. Didn't mean to touch that. So there we go. We can see that we reached this 50% level here. Normally the market, when it makes a real deep reversal, and if it's going to continue into the downtrend right here, it usually goes into the 61.8 and above level. So I am looking for the market to continue beyond that, and we may continue beyond this level right here, which I can see. Let me just place it right here so you can see the level I'm looking at is this level that's here that we look to be breaking at the moment. So I'm looking for that continuation into the 61.8 level this coming week. So if I go down a time frame, let me go to the 4-hour now, and I can see that the market is hesitating around this 50% level and around this level right here. Now I'm seeing two possible scenarios here. Either what we could happen is, oops, if I just delete that, that wasn't what I meant to do. We could have a scenario where the market will, let me just move this Fibonacci to the side. Market will head up first, and if it does move up first, then I'll be looking for a trade where it actually comes down, back down into the level. If I could just get this right for a moment. Back down into the level, and then will be a trade from this area of support resistance right here into the 61.8 level, which is about 1.275. And we have this swing point right here, if you can see that, where there'll be many stop losses, and the market may want to reach towards that because it would like to stop hunt those who move their stop loss down into this level. They like to take liquidity. So that is the setup for GU, pound dollar. The other alternative here is that I may, if the market does head down, then there is a level right here. This level here would be a good area to trade the long from, because that would give us a cheaper price and a better risk reward in terms of buying it back up here into the 1.275 level. So we're going to see what the market does. I'm going to have to watch for price action. At the moment, it's accumulated over the last few candles here on the 4 hour last week, and we'll see where it actually wants to go. Let's the market tell us where it likes to head to. So that's the pound dollar. Let me go to now the pound Aussie. So pound Aussie, I'll go to the weekly again. And what I'm seeing here is a, let me just make it very obvious for you. Very clear, very obvious trend line. If I go down to the 1 day, right here, you can see this trend line. What does that mean? If this trend line was being respected, if it was a real trend line, so to speak, the market would have just head down. At the moment, it hasn't done that. It's been ranging for several weeks now in this tight range. And what that means is that because it hasn't actually followed through, it's more likely to break that trend line and come back to a higher price, which could be this gap in the market right here. And as the first point of call would be this swing right here, because that's where the ultimate stop losses would lie. All these people that have been selling this trend line, that would be the highest point right here. So what I'd like to see is, again, the lower price. That's where would always be a better price to trade, and it would be this gap in the market right here, where, oops, that wasn't what I intended, where I could see the buy from down here into the higher price, which is be the 1.79, 1.8 sort of zone up here. So that's what I prefer. But again, I want to see some price action. I want to see that reversal. Don't want to just enter it willy-nilly and just enter for the sake of entering just because the price has reached there. We may see price coming down, going lower, much lower. And if that's the case, then obviously this is an invalid setup. So that's what I'd like to see on pound Aussie. Let me go to dollar CAD now. So again, the weakness with the dollar is inversely correlated to any dollar pairs like the dollar CAD denominated in dollars, because the weakness in dollar is by definition strength in the CAD if you're looking at the dollar CAD chart. So this weakness in the dollar that I'm looking to take advantage of means that I'll be looking for a short in the dollar CAD. Now, what I'm seeing here is, again, if I'll just zoom out again, look at the weekly time frame, what I see is we've got a level right here. Let me show you right here where we see many bounces off, and the market has faked out of that, created this pin bar, this upside down hammer, and now we rejected that level and we're coming back down. We closed the last week very, very bearish. So I'd look for the continuation of that bearishness, and I would look to continue down into this level right here. I could also again draw a Fibonacci level and look at the, should be this way around. Look at the retracement. So I'd look at the retrace to this level, which matches with the 61.8, this price where market hasn't come back down into yet. So if I go to the lower time frame, 4 hour, you can see we had a deep, nice drop right here. And what I'm looking at is the gap. If I just delete this Fibonacci and move this, just try and grab this trend line right, this ray right here. There we go. So I'm looking for a retracement to get a better price, which would be either up here or will be this level right here where we've got this gap in price. So I would like to see a retracement to then continue the sell opportunity into the level right here, which would be the 1.265. Now the other possibility is the market may drop further down, and then if that happens at the beginning of the week, then I'd look for a pullback and then sell it, continuation on the sell. That'll be the more likely, higher probability setup. So that's the dollar CAD for you. Keep in mind, we've got to be flexible, got to see where the market trades and how it does. No point entering willy-nilly just like that. Now I'm going to look at oil. And the reason I'm looking at oil is because we have had a very clear trend here. We've got these higher highs, higher lows, and the market is creeping up higher and higher. If I look on the daily chart, again, we're breaking new highs. So I am looking at, if it wasn't obvious already, this level right here. We've got a significant level, and we've got another one right here. So let me make it accurate. Yep. So this will be the next point of call, because we've now breached these levels right here. We've closed above them, and you can see clear bullish momentum, bullishness in the market for several weeks now. Sorry, several days, the whole week last week. So again, looking to continue on that bullishness, and a strong oil means strength in the CAD, which would match with the dollar CAD short, because weakness in dollar, strength in CAD would add up to a good setup in shorting the dollar CAD. With that, what are we going to look for? Well, I'm going to go down a time frame to the 4 hour, and I like to see a nice retracements. We closed the week very bullish at a very high price, so don't want to risk entering at that price. Going to wait for the market to come to me and arrive at a better price if it gives it. And what is that better price? Well, let me draw it. Right, I'm gonna draw another line right here. We've got this gap. Oops. Let's move this out of the way. This gap in the price right here. So I'd like to see a nice retracement, possibly to this support resistance area. The deeper the retracement, the better. Then look for a reversal in the price section around this zone, around this area. And then we're going to see if the market gives us that opportunity. So it'll be around this zone right here to go into the buy on the next level right here, which is 1.2, 1.20.5, something like that. Yeah. So that would be a nice retracement right here. If it doesn't do that, it heads higher. Then again, I'm going to look for the pullback on this level, and if we get that pullback, push higher, pullback, and then this would be the area to look to enter. Along will be a higher probability and a better risk reward. No chasing, no let the market do whatever it wants to do. That'll be the best option. Okay, and lastly, I'm going to end up with Bitcoin for this week. It's becoming increasingly popular. Some of you are liking it. And let me show you what I'm looking at. We're at a very interesting point in the technical levels of Bitcoin, because we have this price right here where the market is bouncing from. Let me draw a line right here. Yep. So it's now pierced through that level and ended up closing up here. We left a long wick, which indicates some bullishness in the market, which is a bounce off this level and a retracement of this entire move right here, which we had. So I'm looking for the reversal and the bounce off this level at this moment in time. So what does that look like? Well, you can see we've got this range here, very clear range. The market's been ranging for quite a long time, which means it's been accumulating orders. We're expecting a very possibly explosive, sharp move in the market. Now, question is which direction? Well, my bias is to the upside. It's a buy. And why is that? Well, not only because we're bouncing off this level down here that I just showed you in the high time frame, but also because we got this very obvious trend line. And because it's so obvious, you can see the market hasn't pushed down further. It hasn't respected the trend line, so to speak. And that means it's more likely to be broken, and broken into the levels up here, into this gap in price and this gap in price right here. And I can also, again, draw Fibonacci if that's what you like to do, just to make those levels obvious, and reaching into that 50% level as a first level, and then 61.8 as the second target. Now the question is, how do we enter this? Well, the high probability opportunity would be to wait for the market to either break lower and give a better, nice, cheaper price down here, this level, nice retracement, or failing that, we may have a break straight through this line the beginning of the week, and then I'm going to look for a high probability setup, which is like this break and a pullback, to as close to the trend line as possible. We could have a support resistance zone right here, and then a continuation higher into that level I was just mentioning, 50% or the 61.8, which lies at about 35,000 here, and 33,500, which is the lower level, the safer point to aim for. So we're going to see, we don't want to trade this accumulation. We're going to wait for it to come out of this range accumulation where lots of orders are sitting, and then wait for the market to make its move to show us what to do and show us its hand. So that's what I prefer, sitting on my hands on this one at the moment. But these are the charts that I'm looking at for this week. So I hope that helps, and I hope that clarifies. If you have any questions, comment down below, and we'll try and help you out. If you've got any points of contention or got any questions in your head, I'll try and answer them. So thanks very much for watching. Good luck in your trading this week. My name's Dima, and good luck. See you next week, and remember, manage your risk. Don't enter all these trades at once. Pick one that looks cleanest, watch the price action, and let's see what the market brings, how it develops, how the candles draw. Let it print for you, and then make a decision. No speculating or gambling. We'll just see what the highest probability setups are during the week. Okay, so thank you once again, and see you on next week's video. All right, bye for now.